Hello, everybody. Welcome back for another video. Hope you're all doing well. Hope that everyone out there is doing absolutely fantastic and that you're all having a great day. For those of you looking to keep your money safe during this bull run season, Ledger has you covered. They offer a wide range of hardware devices to keep your crypto and your money safe. It is very important to keep your cryptocurrency secured. I myself have been using Ledger for a very long time. I do find their products a lot easier to use than other companies. That's more so a personal thing. While I do not work for Ledger, I am an affiliate. And I have an affiliate link in the description below the video. They also have really cool gift cards. Yeah. And without any further ado, let's jump right into it. A lot of stuff's happening in the cryptocurrency space. It's always this way. There's always a lot of things taking place. And this time, of course, is no different. The expectations for the cryptocurrency market going a lot higher. And I don't want to use the word forever, but if you've been here, that's kind of what these analysts have been saying. We recently had reports that once again prices are expected. No one knows for certain. However, every single analyst has reiterated that they're expecting cryptocurrency market prices to move up even further into 2026. And then basically kind of forever as we've been going over it. A lot of larger companies, a lot of larger banks have made news this year by telling their clients, by telling the public, by announcing that they believe that people should have a larger allocation of their money, of their wealth into the cryptocurrency market. We had projections years ago. I don't remember what the exact numbers were, but it always ranged around something 2%, somewhere around there. That if that amount of money from all the world's millionaires and all the world's billionaires, just 2% of that money moved into Bitcoin, we'd have a $5 to $10 million Bitcoin in a very short period of time. The expectations are, as Bitcoin's price continues to rise, we will have more people kind of FOMOing into the market, kind of realizing that they should have or could have purchased at cheaper prices, but you know. The Morgan Stanley Global Investment Committee, or the GIC, has advised their very wealthy clients to allocate a small portion of their portfolios to crypto, recommending between 2 to 4% depending on risk appetite. Do you remember years ago, the number we used to always hear? These companies were like, if you need to put money in crypto, do like 0.5%, no more. Don't even think about it. We had one company this summer who was like, yeah, 5 to 10% seems pretty okay. Don't you ever forget either when we heard BlackRock talking about a 50, 60, 70% allocation back in 2023 before they got approved for Bitcoin ETFs. Don't forget that either. The committee issued its guidance in a special report published last week, suggesting that exposure to digital assets should remain modest and conservative. Its recommendations apply across portfolio categories, from wealth conservation at 0% to opportunistic growth at a maximum of 4%. There was, I think, this was years ago. These two billionaires announced, one separate from each other, but it still made news, that years ago they actually had put around, I think, 1.5 or 2% of their wealth into Bitcoin. This is years ago. And then they came forward, really optimistic. They were, we love crypto. Bitcoin's amazing. And then we found out that people that 1 to 2% allocation had actually become around 40% of their portfolio. Because while other assets moved up by 3%, Bitcoin has moved up by far more during the same period. They said while the Global Investment Committee allocation models will not include explicit allocations to crypto, we aim to support our financial advisors and clients who may flexibly allocate to crypto as part of their multi-asset portfolios. The committee, which guides 16,000 Morgan Stanley advisors overseeing $2 trillion in client wealth, framed cryptocurrency as a speculative but increasingly popular asset class. It compared Bitcoin to digital gold and placed the asset within the broader category of real assets. We also just had that little bit of a thing where we apparently heard that next year's US dollar inflation might get a little bit more intense than people want to actually announce out loud, and assets are going to do just absolutely swell. But people not holding assets are going to have a really difficult time. So, yeah, this was, of course, popular news. Morgan Stanley is not a fly-by-night institution. They are excessively wealthy, and the things that they do and the money that they're custodying, etc. Crypto asset prices are expected to continue climbing. This is the news that we've been getting as we continue to move more and more forwarder. Not a word. Forwarder? I'm moving forwarder. I don't think that's a word. Through this year, the speculation continues to rise for prices in 2026, where Bitcoin will be by next summer, and also just how much more money is expected to pour into this market. Yeah, that's the Morgan Stanley 2 to 4% allocation into cryptocurrencies. I would assume logically that number will probably increase if prices do indeed do a 2, 3, or 4x like many people are throwing out there. Yeah, that's the Morgan Stanley news. Yeah. Let's move on. This seemingly will probably never end, but it will at some point because that's just how things are. So, the news is and has been, and this all ties together, this isn't some kind of a separate entity, that fiat currencies are kind of on the downfall. That's not wishful thinking. That's just the mimic of 1,000 economists over the course of the last 20 or 30 years. The issue now being is that, like, it's happening. So it's not like, 1996 and someone being like, eventually this will happen. No, it's happening right now. So one of the ways we went over recently, one of the ways that it is expected that the US dollar will be propped up is by actually creating stablecoins. It's a very long story. It has to do with US stablecoin issuers needing to purchase purchasing literal US dollars for their bank accounts, or having to buy treasury bills, which would then also prop up the US dollar, but inflation would still continue. Let me be abundantly clear with that. This isn't going to save the US dollar. It would simply digitize it further and create a new method that they would hope would eventually, potentially, do something for the resilience of the dollar. I don't know what word is supposed to go there. So next year is also expected to be stablecoin land. Banks, institutions, corporations, central banks are all expected to launch their stablecoins sometime next year. We're expected to go from a billion something dollar market to a $5 trillion market in 4 years. Not a fake 4 years, like 1, 2, 3, 4 years, multiple trillions of dollars. And as such, as you might have imagined, some people think this is fantabulous, and it's mainly people within the stable coin space. Tether co-founder, his name is Reeve Collins. Here we go. He's expecting all currency. All currency to become stable coins by 2030. As part of a broader shift that will see all forms of finance go on chain. Don't forget about tokenization. That's also going to be major next year. He said, and I quote, all currency will be a stablecoin. So even fiat currency will be a stablecoin. It'll just be called dollars, euros, or yen. This was said by Collins in a wide-ranging interview during the Token 2049 in Singapore. He said a stablecoin simply is a dollar, euro, yen, or a traditional currency running on a blockchain rail by 2030. The news from the people in crypto who create stablecoins, like stablecoins, central bank stablecoin, blah, 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 blah. Basically, we're expecting that. So Tether makes an enormous amount of money, as does Circle, but Tether's number one from their stablecoin. It's all making sense now why we. Remember, like the last 3 years, we had all those Wall Street Journal articles about how terrible Tether was, and Tether's evil, and stablecoins are. It makes sense now. All these companies and institutions and banks want to create their own. So, of course, you try and knock out the king before you launch yours. But basically, Tether makes an enormous amount of money from the fees of their actual stablecoin. And I mean, the fees are like 1 cent once again. Like, they're not a fee. Like if you use a bank, they'll be like, hey, there's a 1% fee for doing that. I'm sending $1 million. I know there's a 1% fee. 1 cent is crazy. So, of course, more people are going to use them. We've also had an abundant amount of news. There's also more, but it won't be in this video, about what's happening in Latin America and parts of Africa now. There are people who are like wholeheartedly, openly choosing to use stable coins as opposed to their local currency. Because if you think the US dollar being devalued by 20% in 1 year is like egregious, imagine like 300%. Like, you like the money you make from your job is worth like Jack Diddley squat by the end of the day. So the idea is that once these things begin to launch and it's kind of like proven to them that it works, it exists, and you're kind of able to like, sideline Visa and MasterCard by making all the money to simply flow through government channels, that everyone will kind of jump on board and put everything on chain. This is, once again, I know sometimes it might seem abstract or a little bit weird. This is how you talk about these things, Bitcoin going to $1 million, XRP going to $200. It has to do with stable coins being launched, stable coins being put onto these chains. We've had a lot of rumors. Certain stable coins will run on Bitcoin. Certain stable coins will be on top of the XRP ledger. A plethora of stable coins will be on top of Ethereum. Some on Solana. There's some on Tron. You get the idea. If we're going from a multi-billion-dollar market to 5 trillion plus in 4 years, the main benefactors will be the companies who launch these and also the chains that they're on top of. Yes. So, and then also the idea of tokenization. It is widely expected that by the time we get to the mid-2030s, it'll just be kind of commonplace. You know how you don't think, when you're texting your friend, you don't think about the technology that you're using. When you send email, you're not like, oh my gosh, this was coded with the. You just kind of use it. So everything will simply move on chain, and that's just how things will be for security, for longevity, for transparency, in a number of ways. But the part that they never say out loud is that the main benefactors will be the people who hold Bitcoin, who hold Satoshis, who hold XRP, who are holding Ether. And that's why you've been seeing all this buying happening this year. It's all tied together. If the tokenization market, where you move real world assets on chain, go on to the same exact chains we were just talking about, who benefits? The holders of those coins for those actual chains. So basically, we're expecting a bit of a heavier breakdown in fiat currencies in the next couple of years. And like, it's meant to be massive. Like, it's not going to be like down by 2%. No, we're expecting $1 million Bitcoin because of the collapse of fiat currencies and them therefore digitizing themselves to be on chain. But it's still going to basically kind of be garbage because they're based off of fiat and they will inflate the exact same way. So one of the predictions has been for a number of years is that even this is a prediction, but it logically makes sense. As everything becomes a stable coin, as everything goes on chain, even then people will still begin to go, okay, well, the problem is that this stable coin is also beginning to inflate because it's based off of this currency, and the people will begin to move more dollars, more euro, more yen into crypto, which already then have trillions of dollars in value locked on top of them. You get it. Prices continue to rise. Collins argues that stable coins will be the primary method for transferring money within the next 5 years, as the benefits of tokenized assets have become too compelling for finance to ignore. You've seen it. You've heard it. We've been going over it over and over and over. They will be digitizing all assets. This is going to be a thing. This isn't, some kind of an idea. This is going to be a thing. As you tokenize all these assets, it literally allows you to like pick up a grain of sand in finance and invest in it. This is going to create massive amounts of wealth. If you weren't here when we talked about the automated way that you're going to be able to make money in the future, the benefactors will be the people who are holding these coins, who are holding these assets. I'll say it again quickly. If you have Bitcoin, if you have XRP, if you have Ethereum and you are staking them, if you're getting a yield and you are on one of these chains, you will be able to, through a smart contract or some other means or method, the yield and passive income that you were getting from those coins, you will be able to have automatically allocated to the other fractionalized, tokenized assets, whether it be real estate or gold or stocks, doesn't matter, land. The things that are automatically being purchased from the yield that you are getting from the cryptocurrencies are going to buy you other assets. The other assets that are being purchased, well, then you can have it allocate. I want to only buy assets automated that are producing some kind of an income. As those produce more income, the idea is, because we're also seeing this is so crazy. We're also seeing a movement from the stock exchanges around the world talking about tokenizing their stocks. I'm sure you've also seen Robinhood also is tokenizing their stocks on their platform. The idea would be the dividend that you would normally get, once again, every season, every month, what have you, would in essence, because it is on chain, you would then in essence be able to get a dividend daily. It would obviously be a lot smaller, it would be a fraction of what you would get for that season. But the more stocks you have, even if your dividend is, 1 cent per day, if you have 1,000 stocks, those dividends, of course, add up every single day. You say every single time that we get a dividend, every time we get a yield, every time XRP on Flare gives a payout, every time I get staking from Bitcoin, automatically allocate that into another asset. For those of you who don't know how things work exponentially, it'll happen exponentially. The $5 that you make per day will be buying up tons of other assets. By the time you get to 4, 5, 6 months later, you are buying $45 worth of assets every single day. And that's if you have a smidge of crypto. If you already have a lot of crypto, you'll be making $38 per day, $124 per day. By the time you get to the end of the year, you will have accumulated hundreds of thousands of assets, all automated, on chain that are constantly paying you more money. And this is why we keep seeing all these people buying up all the crypto. Every single major coin has staking or will have some kind of a yield. The name of the game is purchasing assets that have a potentially large upside. People are talking about Bitcoin going to $12 million, XRP doing a 45x in price. Remember the $68,000 Ether. You benefit from that because you make more money, and the more money that you make from the yield and from the passive income, that can go into tokenized assets that are then automatically purchasing other assets. It is going to be the craziest, easiest way to create wealth, and we are 3.5, 4 years away from it being like everywhere. This will be on every platform. Everything is probably moving on chain. So yes, without having to read any further, this guy believes that basically stablecoins are going to be like one of the core functions of the world. And it's not that far-fetched, even thinking of it in that way. Crypto will exist, but imagine we do, in essence, have some kind of price volatility in Bitcoin in the next 5, 6, 7, 8, 9, 10, 11, 12 years. Prices are, it moves up and down, nothing as dramatic as we've seen before. We're at a $3.4 million Bitcoin, but the movements are still whatever. The money that people make from staking their Bitcoin from Babylon or otherwise, they then transfer that money into a stablecoin to be able to walk into a store and then buy stuff. So not only are you not touching your Bitcoin's making you free passive money, and you transfer that money into stablecoins, US stablecoin, Euro stablecoin, and you go to a store and that's what you use to buy. That's basically what the future is going to look like. Yeah, we have some interesting times ahead of us. I always continue to desperately hope that you are listening and that people within crypto really get it. Because I keep noticing a lot of people within crypto don't get it or aren't paying attention, or you gotta prepare yourself because this is going to be wild. Well, I do think that is going to do it for this video. I do hope that you have all enjoyed. I do hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope that it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.